Good afternoon, traders. It's been a while since I've been here, huh? Yeah, I didn't give it up completely. No, no, no. I would never do that. But yeah, I had some busy stuff in my mind. Tomorrow I got to go see the what the hell you call that person? The eye doctor, the optometrist. I don't know. They're gonna look at my eyes, and which they've healed up a lot lately, because I've been doing what I call toe ups a lot. I stand on my toes and then I go back down. I lift up my heels, I go back down. I lift up my heels and I go back down. Each time I do that, I'm standing on my toes. So that's why I call them toe ups, because I lift myself up on my toes. So anyway, I'm going to show you how I would have looked at this market today and how I would have traded it. Okay? So let's do that. Okay. Let's draw some little sticks on there. So I think it would have went something like this. I think it's from over here for when it opened, when it started trading at 8 o'clock. 8 o'clock is right here. Okay, I'll even put the thing on there to show you. You see right here it says 1500 down at the bottom there. That's 8 o'clock. That is 8 o'clock right there. That's when we're in the lighter shade. When we're in the dark, we shouldn't trade. That's the time to sleep. Then when you want to trade, you got to look when it turns a lighter color. See, it's almost 12 o'clock here. It's just one more candle and it's 12 o'clock. But I'm going to show you what I looked at today. Okay? I know I'm repeating myself now. So basically like this. See? This one's pointing up. This one's pointing down. This stick, this line right here, this line, that is diverging because they're both diverging away from each other. You know what I'm saying? Oh, yeah, you do, you do. So let me put the little arrow on there, the little pachonchos, I call it, right here. So somewhere in here, right, you would have got short. And this is, so say you got short right on the close of this candle. What time was that? See, it's 1640. That is 10 minutes into the open, okay, of the stock market. Okay? Right here on the higher end of this. See, 1640. If you look down at the bottom where I'm filming this, it is where we would have oh, wow, I can't talk. It was 10 minutes after the open, okay? You would have sold it here, and down it goes. You would have snagged some profit somewhere in here. Whether you got out here at the bottom or you let it go down some more and you took the profit, you would have took some profits in there. Okay? Why? Because you would have been here to trade this at that time. You would be here if you really want to trade this. You got to be here at least 15 minutes before the before the United States opens for trading. And when the United States opens for trading, I mean all the other markets that make this market move, like the S&P 500 and so on. Okay? There's other ones too. So that's where you would have sold. You would have sold in there and took some profits in here. Then the market turned around right here. It did a UE. It went back up. It's going back up now. You see this? So first, what are we always looking at? We're always looking at the 5 EMA. Okay, we got to look what side is it on? Is it above the 7 EMA, the 5 EMA, or is it below? So in this particular situation, if you did a trade here, I don't know, maybe you got out the skin of your teeth. I don't know. As the price came back up here, I don't know if you would have done that. Me, myself, because it was after the open, see right here, it was like 10 o'clock right here, okay? So it was like half an hour after the open. The open was over here. So we're always looking, so If it's 10 o'clock now, where are we looking for our trade? We're waiting for the next setup because we already did this setup in here because we would have been here at that time. That's why I show them all. I showed them all in the past, but if you were trading, you would be there right at that moment to pull the trade. Just like right here. We have the 5, it's above the 7. See, this is the 7 EMA right here. You see the little 7 in brackets? That is the 7 EMA, that pink line right there. And I use a pink line so I can see it very, very clearly. So the 5, as you can see right here, the white dashed line, it was above the 7. So that means we can only do buy trades. Just like over here, we couldn't do a buy here because the 5 was below the 7. You can only do a buy trade when the 5 is above the 7 over here. And over on this particular situation, it was below, the 5 was below the 7, so we can only look for sell setups. You see what I'm saying? You do. So we had a lower close candle right here. It is the place where we would have been there at that time, at that exact moment, right here, and we would have sold it. Or I mean, we would have bought it because the 5 is above the 7. So we would have bought it here, it went up, you made money. The second time it came back down into the 5 right here, you would have looked to buy it again. Here's a third time, you buy it again. This time, the fourth time, I don't know, it would have worked. It would have worked for you, but I would never do that after cashing in 1, 2, 3 times. I bought 3 times here on all these lower closing candles, and that's where I would have got in the trade setups. That's where you need to get in the trade setups. If there was more divergence, I would show you, but there's only this one situation right here. Today, there was divergence. High and a higher high and a lower high on the indicator. The indicator of choice for me is the OSMA 12-26-9. Never ever change the settings. Never. And I've been trading with this sucker since 2011, ladies and gentlemen. 2011, men. I've been trading with this OSMA. I don't use the MACD. I don't use the stochastic. I don't use any of those things. Okay, you can use those. I use the OSMA. The OSMA is the best. Through trial and error, I choose the OSMA. So how long have I been trading? Like I said, since 2011. So what's the date today? It is 2026, right? So say 2010 to 2026, it's like 16 years I've been looking at this shit. 16 years and showing you my videos and showing you where I would have entered. And yeah, that's it. And how I would trade the market. If it was going down the opposite way with the 5 below the 7 going down this way, we would only be looking for sell trades. But because the market rallied up today, we're only looking for buy trades when the 5 is above the 7. And I hope I explained that really clearly to you guys. You can only buy when the 5 is above the 7. You can only sell when the 5 is below the 7. That's it. You have no idea how much simpler this makes this whole thing when you look at it in the same way I look at it, okay? It's up to you what you want to do. It's up to you what you want to trade. If you just want to buy because the market just went down, well, hey, buy the dip, sell the rip, right? Or if you just want to wait till you have something backing it up, like if you want to be a buyer, then you want the 5 to be above the 7. If you want to be a seller, you want the 5 to be below the 7. I know I keep repeating this to you like until the cows come home, but I'm pretty sure you understand what I'm saying here, and it will work for you if you take the time to look at your charts carefully and look and say, hey, oh, look, the 5's below. We can only do a sell trade in here. And boom, you would have made money. And then another one, right in here. The 5's above now. The 7, we can only look for buy trades, buy trades, buy trades. See? On lower closing candles. So we try to sell when the 5 is below the 7 in a downtrend. But we're looking for pullbacks. You know, sell the rip, right? Buy the dip, sell the rip. That's it. That's what it's all about. But I just mixed that all up. That's not even right. But anyway, like I told you, you don't be buying way the hell up here. You'd be buying each time it pulled back. 1, 2, 3 times. Here's even a 4th time. I would never do it more than 3 times. So because you don't know at that point in time, is it going to return? Is it going to retrace now and go back down, or is it going to go back up even higher? You don't know. That's why it's always best to do these trade setups when it first crosses over. So meaning when the 5 first crossed over, the 7 right here, this is where you're waiting for the next setup, and the setup was right there to buy it right there. And then the next setup after that, which is more risk because it could be close to, you know, it would have been very close up here to the high, but it decided to push higher. So you got to pay attention to what your candles are doing. You got to look at them and say, hey, this is how they open. This is how they close. This is a setup. You got to look at all these factors. Factor them in, and you'll do good. You got to be always, like I said, I'll say it again one more time. You can only sell when the 5 is below the 7. You can only buy when the 5 is above the 7. That's it. Pay attention to your candles. It's not how they open. It's how they close that you really got to watch for, okay? So there's an old saying, it's not how it opens, it's how it closes that determines the near-term trend. Just like this one closed up here. Look at the near-term trend. It closed up because it's going to go up. It's going to go up with the trend. That's it. Boy, did I babble on today, eh, guys? Holy jeez, my Forex pipsnaggers, my divergence traders that used to trade along with all my videos. I've been doing these videos since I think it was no, it wasn't that early. It was 2010, 2011 when I started doing these videos, and I've been doing them ever since. Just for you guys. I don't really do it for myself. I know what I look at and what I want to trade. I do it for you guys. That's it. And that's all. Soon I'll be trading again myself. I'm almost there. It's been on oh, my phone almost went on the ground there. On April the 8th this year, it's been 1 year since I've had my stroke. So that was like last week or something. No, it was 2 days. It was no, it's the 16th of April today. Yeah, so 8 days ago it's been a year since I had the stroke, and it's taken me all this time to get better. Actually, today is the best I've ever felt in over a year, believe it or not. So hopefully I'm going to get better soon, and I'm going to be able to go walk outside and listen to the birds or watch the birds. You know, the birdies. Yeah. I got to get better. Anyway, I want to thank you today for spending this time with me. I hope I drilled something in your head so that, you know, you follow it very closely. And you know what I told you? I told you all about it already. You do what I'm saying here, and it'll make your life trading so much simpler, and it'll just be awesome because it'll be simple. It'll be much simpler. I don't know. I can't even say the words right. Come on, Jason. It'll be more simple if you follow exactly what I'm saying. Just put 2 moving averages on your chart. Put the 5 and the 7 on. The 7's going to be shifted 1. Let me show you. Okay? There's the 7. shift 1. See? That's it. For the pink magneto line, shift 1. That's it. And this white one, it's the regular 5 EMA shift 0. Okay? EMA stands for exponential moving average. Okay? That's all you need to put on your chart is the 5 and the 7. That's it. It can't get any more simpler than that. So anyway, thank you for watching and listening. I hope I didn't go on too long. I hope it helps you make, do much better in your trading. I hope it really helps you. Thank you and good luck and good trading.